Today I want to look at semi-transparent active ETFs and look at how well they performed. Now, back in 2019, the SEC officially approved semi-transparent ETFs. Basically, most of these semi-transparent ETFs, they're actively managed, so they're not linked to an index. Like most of the Vanguard ETFs and most of the most popular ETFs. They're also known as semi-transparent, which means they don't post their holdings on a daily basis. They don't have to. They could do it on a monthly basis or a quarterly basis instead. They can invest in stocks and not tell the investors exactly what they're buying every single day. There were a bunch of these in 2020 that came out, and a lot of them have sort of flopped. So when I was researching this and I started entering ticker symbols, a lot of the ticker symbols had disappeared. So a lot of these had, I think, shut down. So I'm using this Verify website. They've listed all of the semi-transparent ETFs, at least the larger ones or the active ones. So I've selected all of these here. We've got the Fidelity Blue Chip Growth ETF, 2.8 billion in assets. The next largest one is the Rowe Price Blue Chip Growth ETF, 954 million in assets. Then we also have another Rowe Price, 749 million in assets, Rowe Price Dividend Growth ETF. We also have the American Century Focused Dynamic Growth ETF, $277 million. And we have the Fidelity Blue Chip Value. Now, I've included all these except this one here that's very small that only has 19 million. So we're going to see the performance versus the indexes and see how well they performed. I'm going to select August 4th, 2020 as the start date. And we're going to 2024, currently December. Okay, so here we have it. We have at the very top, this is roughly 3 years or so. We've got the Fidelity FBCG, the Fidelity Blue Chip Growth. There's also the Fidelity Blue Chip Value, which is FBCV, as you can see here in yellow. That did fairly well too. So the top performer, Fidelity Blue Chip Growth, 91.84%. TEQI, 82%. Okay, TEQI is the Rowe Price Equity Income ETF. Since these ETFs don't post their holdings on a daily basis, it's possible that the ETF could be mispriced. It could be severely overpriced or these ETFs could be severely overpriced or underpriced unless we know exactly what they're holding so that the ETF is priced properly. How they deal with this is they set up a proxy portfolio, which gives a general idea of the types of stocks that it holds, but it doesn't give the exact stocks. So I think the way it is they may, from what I've read here, they may actually list another ETF that has similar holdings as the proxy portfolio, and then that's going to keep the ETF price from getting out of whack. The whole point of this secrecy is they believe that they may have some advantages. By keeping certain information about the ETF secret, this ETF may face less risk than other traders and can predict or copy its investment strategy. This may improve the ETF's performance. If other traders are able to copy or predict the ETF's investment strategy, however, this may hurt the ETF's performance. Now, when we look at TEQI, this was the second best performer near the end. It's got a 0.54% expense ratio, which is very high. And if we look at the holdings, this is more of a value one. This has the largest holdings are in financial services, 21%, healthcare 16%. Tech is only 10%. If you look, Wells Fargo is their largest holding at 2.35%. Then the Southern Company and some insurance companies like Chubb and MetLife. If we look at the top performer, the Fidelity Blue Chip Growth ETF, FBCG, it's heavily invested in technology, 47%. Consumer cyclical, around 20%. Nvidia has got 14.55%. That's quite a bit invested in Nvidia. Apple at 11.29%. It's got all the usual tech suspects, just sort of like the S&P 500. You've got Amazon, Microsoft. If we look at the Fidelity Blue Chip Value ETF, FBCV, it's more heavily invested in financials, so more value. 24% financials, 18% healthcare, only 7% technology. And if we look at the top holdings, we've got an oil company, ExxonMobil. You've got JP Morgan Chase at 3.5%, and a bunch of insurance companies. We also have the Rowe Price Dividend Growth ETF, DGVG, it's got sort of a mix. It's got Microsoft 5.8%, Apple 5%. It's got 22% in tech, which is a little bit on the light side. Around 18% financial, 15% healthcare. Okay, so back to the performance. When we look at the top performers, we've got, roughly 4 here that we're near the top. So we've got the Fidelity Blue Chip Growth, we've got the Rowe Price one, and we have the Fidelity Blue Chip Value. Okay, so this looks pretty good, right? But there's a very high fee for all of these. Most of these have 0.5% fee, which is very high. So let's just throw in one for fun. So let's throw in the Vanguard S&P 500. Let's throw in the Vanguard S&P 500 Value ETF, VOOV, as you can see here in yellow near the top. This is a value ETF. It's not the growth one. It's already near the top. As you can see the yellow here, 86%. It's almost as high as the Fidelity Blue Chip Growth, which did 91%. And actually it's been higher than that a lot of the time. So far you could get VOOV for, if we look at the Vanguard S&P 500 Value ETF, VOOV, the expense ratio is 0.10%, so much less expensive. So when we look at Vanguard S&P 500 Value, you've got mostly financials at 24%, healthcare 16%, tech only 9%. You've got Berkshire Hathaway 4%, JP Morgan Chase 3%, ExxonMobil 2%, with a much lower expense ratio than the others. So we can see this Vanguard, without having active management, without having secrecy, the Vanguard S&P 500 Value, VOOV, is already second place or first place a lot of the time. And it's doing this all with an index that's posted daily holdings, and it posts the daily holdings daily. So there's no secrecy, and it's not actively managed. So I think this kind of proves just right here, when you pick the value ETF, it's already near the top, and it's beaten the actively managed semi-transparent ETFs. Okay, so let's remove this one. Let's do one that's more aggressive. Let's add the Vanguard Information Technology ETF, VGT. Now VGT, you can see, is very high, 109% return. It's invested heavily in tech, but it's outperformed it at a lower expense ratio. So I would guess that the Vanguard Information Technology ETF, with that lower expense ratio over time, is going to be able to beat these higher expense ratio ETFs. Now, if we go back and we look at the Fidelity Blue Chip Growth ETF, as you remember, they've got a high 14% in Nvidia. Now let's change this to VGT and see what they have. Okay, so very similar. The Vanguard Information Growth ETF has 16% in Apple, around 15.4% in Nvidia. So it's basically got a little bit more in tech, it looks like. So that, I think, is the main reason for the better performance and the slightly lower expense ratio. We could also add Vong here, which is here in yellow. As you can see, it's also a top performer now. It's the Russell 1000 Growth ETF from Vanguard, 94% return now. We could add that one. If we look at the Vanguard Russell 1000 Growth ETF, Vong, it's got a high percentage in technology, 49%. It's got almost 12% Apple, 11% Nvidia, Microsoft. Okay, and if we want to do the standard, here in yellow, we could do the Vanguard S&P 500 ETF, VOO, as you can see here in yellow, 88%, 88.19%. It's already second place, and it's basically a much lower expense ratio. When we look at the Vanguard S&P 500 ETF, VOO, it's got way less in tech than the top performer, but it's still near the top. It's got a very low expense ratio. Technology, 32%, according to this. Financials, 13%. It's got a little over 6% in Nvidia, 7% Apple, 6% Microsoft. So the whole point of this is, do actively managed ETFs that have some secrecy involved, can they beat the indexes? And I'm just not seeing it so far. So these managers can buy, I think, pretty much any stock they want. They're not limited to an index. So even with this and the secrecy, they still have failed to beat most of these index ETFs. So I would probably be hesitant to buy any of these actively managed semi-transparent ETFs. So anyways, I hope you liked this video. Please give me a thumbs up if you like this video, like, subscribe, and check out my referral deals. I'll put a link below where you can sign up and get a $50 bonus by signing up with any high yield savings product with Raisin.